Today, we're gonna do a reality check. We're gonna take the data that we have in a pitch deck. I'm gonna tear it apart. No, we're gonna be constructive, actually. 3 things: growth, retention, and go to market. If you wait till the end of the video, we'll reveal whether we would write the check or whether we would pass. Let's dive in. Here are some traction slides that Nick pulled up.
These are charts that we saw in the real world.
My reaction is we are looking at a fintech. I see interchange fee, so money is flowing.
There's almost making half of their revenue through this interchange. Interchange almost acts as a monthly recurring revenue. This business is growing 350% year on year. They're at $2 million of ARR, which is really strong.
Let's jump into retention. I see the trend line. I don't entirely believe it because there's a big dip in the middle, but they seem to have recovered in the last quarter. ARPU's going up and to the right. That last ARPU point is very interesting. That's very questionable in my mind.
Seeing that go from 80% to now over 90% is a positive development. I put very little value in month-to-month retention, especially when it is over 100%, which I just can't tell in this metric. So I just don't put a lot of value to it. Looking down there on the ARPU chart, they're explaining that the revenue retention is going up over time because the average revenue per user is going up. What is key to note is that the average revenue per user is actually mapped out here by life month, and it's probably the first early adopters that are spending the most on it, and that's why you see this spike up to the right.
It brings up more questions than answers, so we'll see that in deep dive. Let's go to the third, go to market, magic number 3. We're not really big on that. We'll explain why, but it is a capital efficient business. They grew the business to $2 million ARR, burned 1.75 altogether. Goes down a little bit towards the end. I'm wondering if there's seasonality. I would want to know about their channels, especially as you sort of see these things go up and down in seasonality. I want to know how they're acquiring their customers.
As a VC, we will most likely start wanting the business to start investing more into customer acquisition spend. Can they accelerate this, and can this strong efficiency today hold stable?
So let's pull up deep dive.
Let's kick off here with growth. We love looking at things on a cohort by cohort basis. How are you evaluating this?
All the cohorts are pretty stable, nothing lumpy. And of course, new ARR, which in the green is what I'm to the right. I love that.
When these dollars are going live, there's a really steady trend up and to the right where effectively every single month is their best month to date. There's a really positive trend. They're not just growing, but they're growing at an increasingly faster pace. And we can see that here in the top line growth over time as well. It's actually better than what we initially saw on the chart.
Check for me on growth.
The next thing we always like to look at is how are these dollars retaining over time.
I'm looking at the customer retention. It's very consistent, so I know their ICP is fairly stable. The latest cohorts on the revenue side is doing better, so that's a good sign.
Once these cohorts have stuck around for 6, 7, 8 months, over 50% of these dollars are retaining into the long term. In other words, once half of the revenue base has churned out, the retention life month to life month gets to 100%, exactly what we like to see. Retention actually is getting better over time.
Burning through, go to market.
Our take on the efficiency of a business. What are you seeing here, Conrad?
Too easy, it's green. Pretty much everything's been green. Cumulative revenue per user up and to the right, clean. Volatility on the CAC though.
When Conrad talks about cumulative gross profit over CAC being in the green, the business is able to acquire these new customers, these new revenue dollars at a profitable rate, meaning that there's probably room to invest more dollars into those customer acquisition channels. That is actually a positive dynamic in my opinion. The one thing that I do want to point out is that the business reported a 3 magic number, meaning they get 3 times the ARR versus how much they spend on sales and marketing. The difference though is we only see about a 1.5. This number is actually a fair bit lower, and we're looking at things on a gross margin basis. It's still really strong. It's still well within the green. Overall, I give this a thumbs up.
Do we pass or do we write the check?
I'm writing this check all day long. I really like these numbers.
I write that check as well.
That is why looking at things on a cohort basis is usually a lot more accurate to look at than just a simple magic number.
So this wraps it up. See you guys next time.